We're fortunate to have him as part of our community. Brock, how you doing today?
I'm doing great, Jason. How you doing today?
Good, man. Hey, listen, thanks
Good.
for joining us. So let's get right into it. What's happening in the local mortgage market, and what are you seeing over the next few months?
There's a lot happening right now in the local mortgage market, Jason. We're seeing a lot of conversations right now still with these rates. That's obviously the main topic that we're seeing. But we're seeing a lot more people, getting in the game. We're seeing a lot more people being pre-approved. We're seeing a lot more homes listed. But we're also seeing some homes sitting on the market a little bit too long than what we want. So I think we're still kind of on the fence with a lot of people, and they're waiting for these rates to really tumble so they can get back in the game. I keep telling these folks, though, once those rates do come down, it's going to be gangbusters out there, and you're going to be competing with everybody, that's been sitting on the sidelines. So it's an interesting market. There's quite a bit of business. I'm helping over 10 families right now. So it's, we're doing pretty solid as far as that number is concerned. But we're talking refinances again. We're talking, consolidation of debt, home repairs, taking that equity out of their home to try to, put some money back in their pocket. And it's pretty exciting right now. I'm excited for 2025, and I'm excited where we're heading for the rest of this year.
Great. Yeah, totally. So what I'm seeing from a realtor end is that the market is slow. When I looked it up this morning, according to Redfin anyway, their latest data about the Columbus Central Ohio housing market, we're running right now at about 2%, 1.5%, 2% under what we did last year with pending sales. So sales are slow. I am hearing people say, "Hey, I'm waiting for rates to come down to do anything, either buy or probably some of them are refinancing too." But so, and one of the things I'm getting asked a lot is about refis, even though I'm not a mortgage expert, but you are, but they're also talking about purchasing and waiting for rates to come down. So with the purchase, if someone goes into contract on a property, like if I show somebody a house and they say, "Hey, I like this house," we write an offer, it gets accepted, but they want to kind of wait to close to make sure that they're getting the best rate possible. Talk to us about that. Is that a strategy that works, and how does that all function?
Sure. So typically when a family goes into contract, it's usually a 30-day contract. Now, sometimes we see 45 or 60-day contracts, but typically what we see is a 30-day contract. So once the contract comes in, we can talk about locking your rate, or sometimes we're having conversations about floating a rate. Right now, I am floating a few rates just because of conversations that we're having and different things that we're seeing as far as rates where are they going for the rest of September and into the end of the year. So there's a key date next week, September 17th and 18th, where the Fed will meet. Chairman Powell will discuss, kind of where we're heading for the end of the year. So the three families that are floating right now, we're waiting for that conversation, and we're really hopeful that these rates will come down and we can lock into a better rate. So you can either lock or you can float. Floating does involve a bit of a gamble because rates could go up. That's not what we're hearing. That's not what we're anticipating. So I think it's a good gamble right now to float that rate. Now, if a family doesn't want to take that risk on and they want to lock today, we can certainly lock your rate in. You're in control of that. But the other thing too is, let's say we close today and the rates are, I don't know, in the sixes, and 8 or 9 or 10 months from now, rates drop dramatically. Let's say and this is hypothetically speaking, let's say we're in the 4s, low 5s, and it makes sense to do a refinance at that time. As long as there's enough equity in the home, we can look to refinance a rate term refinance. I would not anticipate doing a cash out refinance just because you haven't been in the home long enough. So unless you put down a substantial amount of money at closing, there's probably not going to be enough equity to pull, cash out. But rate term refinances, we did a lot of those in 2020 and 21, and they helped out a bunch of families.
Right. Yep. So talk to us for a second about when you can refi and when you can't. And specifically what I'm talking about is I hear a lot of folks on different YouTube channels and hosts mention that you can't refi unless you have a certain amount of equity. They're not necessarily talking about cash out refis. They're just talking about refining, period. So tell us like where those levels are. Like if I'm a buyer and I purchased, let's say last year at this time, and now I'm excited because rates are starting to drop. When, what does it look like when I refi? Like how much equity do I need to have? And when is the best time to refi if I've been waiting that, period of time for the last year?
Absolutely. So it's really going to depend, and it's going to depend on, is it a primary residence? Is it an investment property? Is it a secondary home? And then, what program are we looking to get into? Are we looking to do a conventional product? Are we looking to do a VA product? Are we looking to do FHA? So there's a lot of different variables involved. So we can just talk about, let's say you're in a conventional single family house and you put, I don't know, you got in the home, you're a first time home buyer for 3% down. You're looking to take cash out, there's a 80% loan to value that you have to be within to pull cash out. So basically you have to leave 20% equity in the home, and anything that's beyond that, you can look to pull out as far as cash. So typically that's going to take a few years for that equity to build. And it's also going to depend on, are you making extra mortgage payments? Where's your rate at? What are you looking to achieve? Now, if you're looking to just do a rate and term refinance where I'm just simply trying to lower my rate, you don't need to have so much equity in the home. We can do that for a lot less. And, with an FHA, typically we need to leave at least 3% equity in the home. We can do your rate and term refinance, but we're really trying to roll closing costs and those type of things back into the loan. Because a lot of times for my clients specifically, I don't really want you to bring anything to closing. And a lot of times with a rate and term refinance, we don't even need an appraisal. Now that is a systematic pull, but if we don't need an appraisal, A, it's going to save us money, and B, it's going to save us time. So, the other things that I'm looking at too, especially with a rate and term refinance, is if you do have enough equity in the house, can we eliminate mortgage insurance, and also can we reduce your rate? And if both those answers are yes, it can be a phenomenal savings for families. And also keep in mind, when we set up your new loan, you're going to skip one, possibly two mortgage payments. So right now, it's crazy to say, but we're right on the door of Christmas. It's right around the corner, and we're a little over 3 months away. And if we can skip a couple mortgage payments, if we can lower your rate, that's going to free up some cash flow for you, and we can buy those Christmas toys, because we both know they're not getting any cheaper.
Right. No, they're definitely not. Yeah, good point. So you mentioned something about the amortization schedule. I closed a property yesterday. I closed with someone yesterday, and they were and don't be upset, Brock, but they were a referral from another lender out in Colorado. It was a long story how that happened, but or I would definitely have sent them your way.
Totally understand.
Yeah. No. But it was amazing when I sat down with the person at closing, and I said, by the way, did you know that if you make extra mortgage payments in the first year, what it does for you long term? And they were like, they're first time buyer. They were like, no, I don't know. And so I showed them what it looks like, and they were like, wow, if I make an extra $5,000 in payments in the first year, that's what it saves me. And I think it saved them something like $22,000 over the life of the loan, and it shaved like 3 years off their loan in that example. So that was really big, and that's something people should pay attention to. The earlier that you can make extra mortgage payments, the more effect it has on the loan. You can Google extra mortgage payments, and you'll be amazed at what that does for your loan. So that's a great point to bring up. I don't know that a lot of people know that.
Absolutely. I always advise clients, if you can make one additional mortgage payment per year, starting year one, the long-term effects on that, it's going to shave years and years off your mortgage, off a 30-year mortgage. So it's a smart tactic, and if we can get that paid down sooner rather than later, I think everyone's goal is trying to get out of debt.
Right. So, okay, so let's switch gears for a second. The other thing, I'm curious what you think is at what interest rate does demand come back to the marketplace? Where is that, you think?
Yeah, so I keep pointing to, that front number on a rate in the fives. So I think when folks start seeing 5 in front of that rate, we're going to start seeing a lot more people in the game. The other thing we're kind of battling right now is, inflation's up. Where are wages at? Does it make sense to buy right now? But the other conversation I'm having with a lot of folks is rents are skyrocketing. You do some rentals. I'm sure you can attest to that, you're seeing, rents increase. So does it make sense to rent, or does it make sense to purchase and build equity in your own home? So, I'm on the side and on the team right now. Like, let's buy now, because if we wait, when rates fall down, the demand is going to increase exponentially, and you're going to see home values increase as well, because as demand goes up, it makes a lot easier for sellers to increase that purchase price because the demand's there. We still have a home shortage in America. That's pretty apparent with what we've seen, what we've talked about, and so there's still demand out there. But I think the fives. I think we're sort of seeing a lot of activity and refinance activity, and also a lot more purchase activity.
Yeah, there's a psychological thing there, right? I think you're right. I think under 6, when they start seeing 5s, that'll make a big difference. Even though I think FHAs are probably in the 5s now, I would assume that it's not. When you look up Mortgage News Daily and you see a 5 handle, that would make a difference, I'm sure, in how people think.
Yeah. And I'm quoting families right now in the 5s for government-backed loans, VA, FHA, things like that. So they are starting to improve. Conventional is not quite there yet, but I think it's coming. September 17th and 18th is a key date, like I said, with the Fed meeting, and they're talking about where we're moving for the rest of the year. There's a lot of analysts who believe once we hit November, we're going to start seeing even more rate cuts, and we're going to see further rate cuts as we enter the first quarter of 2025. I fully anticipate that, unless something crazy happens in this country, which at this point, anything's possible. I think we're going to start seeing some nice rate reductions, and it's going to really provide some relief for families. It's going to make homes more affordable. It's going to allow people to, pay off some of this credit card debt that's been stacking up. I don't know if you have any credit cards or if you pay attention to your statements, but I had a credit card statement come in, and it also had a rate increase on it, and it was 30%. Well, that card got paid off and cut up. I'm not using it anymore. So, that's a crazy number. And a lot of folks, they don't have a choice. They're racking up credit card debt. And then unless you're making more than the minimum payment, it's going to take you a couple of decades to pay that card off. So, to look to do a refinance, take the equity out of the home, put it in a fixed rate, and provide that relief for families sometimes is monumental. It can really provide a big savings and allow them to live a lot more comfortably.
Yep. Yeah, agreed. And then I guess the goal with them would be, don't use that credit card again, right? If you can help it, right? You don't want to.
Yeah,
you don't want to reuse it. Yeah, it's and you don't want to use the money to take a vacation or to, buy a pool or something like that, right? People right now, I know, credit card debt is exploded. It has definitely since the lockdowns. And I have clients, and I know sellers and buyers that are both struggling, and I know sellers that are struggling also because of property taxes. They're like, man, my payment went up, $300-400 a month, and I've got to sell my home now.
Right.
So it's they're hurting all over, and so that's, I think one of the opportunities out there for buyers right now is that the market being so slow, there are sellers that will negotiate. There are sellers that need to
Absolutely.
sell. Not wanting to sell, they need to sell. And if you can find somebody who needs to sell, you can generally speaking get a better deal. And they're out there. Trust me, they are out there, and they want to. They need to sell, and they need to do something different because of a life change or because of finances. And if you can go out there and look at homes that have been on the market for over 60, 90 days, that's maybe where the deals are. Unfortunately, I think a lot of buyers right now still have this idea that they want a move-in ready house in the perfect neighborhood on the perfect street in perfect condition. Those homes are still moving. It's the homes that are not in those situations that maybe sit a little longer.
Absolutely, and we're seeing higher price points also sit a little bit longer too, just because there's less buyers out there right now. So if you are looking to get in the game, it's less competitive. You're going to have a way better chance of having your offer accepted. Versus I think in 2025. I think in 2025 it's going to be a bigger challenge.
Yeah, and you're right about the amount of inventory. We're low on good inventory in the market, especially around here in Central Ohio. It's seriously lacking affordable homes, and hopefully we can build more. But there's also a lot of homes that are already built, and they just need some love. And there's housing supply there just left people don't pay attention to it as much, but it's there. So I always encourage buyers, hey, go out there, hunt for a deal, find somebody who needs to sell, and be flexible with your wants on the house and focus on the needs. And you can get yourself a much better deal than trying to buy something that, just competes with your friends, right? Just because your friends bought one.
And it all starts with a conversation. It doesn't hurt.
Yep.
It doesn't hurt to try to negotiate. And especially if you have a home that's been sitting in it for a while, a seller, you'd be surprised how many sellers really aren't getting a whole lot of traction right now. I've had a number of realtors reach out to me about open houses and then provide me feedback and say, we only had one or two families show up all day Sunday, or we had none. So if you're looking to buy, if your plan is to buy in the next 6 to 8 to 12 months, so it all starts with a conversation. And I think a lot of people just need to have those conversations with sellers just to get the ball rolling. If we wait until next year, it's going to be a lot more challenging because there's going to be a lot more people in the market. So I'd encourage people to get pre-approved, especially if you're looking to buy here. If that's the goal, let's say your goal is to buy in the spring. I think your goal should probably be to get in the market now, because even though inventory is light, there's still homes out there for sale right now. I have a couple of clients right now that really need to sell because they want to buy, and they're having a tough time. And these are nice houses. They've done updates to them, and there's less buyers out there. So get in the game. We can refinance that rate if you don't like the rate right now. We can refinance into a lower rate. I can't renegotiate a loan amount once you've already purchased the home. So if you wait, you might end up paying more in the long run.
Yeah. Well, great stuff, Brock. So if somebody wants to get a hold of you, how do they find you?
So my cell phone number is 740-616-3565. I'm available Monday through Sunday. Every single day I'm available. I'm available in the evenings. I had a client call me last night at 9:30 p.m. They're like, "Oh, I didn't realize it was so late in the evening." Hey, that's okay, because I'm just sitting here, almost watching some TV and just relaxing. But I'm always available, and I'm always ready to help folks. And again, it just starts with the conversation. So a lot of people are kind of on the fence about buying, or they're fearful of the process. We've streamlined everything. I have a mobile app. I can text it right over to you. You can complete an application, right from the comfort of your lazy boy recliner, and you can send me docs right through through the app on your recliner, and you can e-sign documents. It's super, super streamlined. And if it's a no today, and you have the want to buy, if there's a will, there's a way. We're going to figure out what we need to do to get you in the game. And sometimes it's as easy as just paying down a credit card. Sometimes you think that you don't have the money available. Well, guess what? there's a first-time homebuyer program out there where they will offer up to 5% down payment assistance. So give me a call. You know, I can help you navigate. I can take some of that stress out of your life, and we can figure it out.
Yeah, great stuff. So, folks, I'm going to put the Brach's contact information in my description below, and yeah, reach out to him, start the conversation, and then when you're approved and you've got your payment, you know, you understand your payment and how much you qualify for, then give me a call and we can go house hunting. So that's how it works, right?
100%. Yeah.
Awesome.
Get you pre-approved. Get that pre-approval over to Jason, and negotiate a contract and get you moving.
Yep. All right. Thanks, Brach. Hey, listen, have a great day. We'll do this again soon.